What's going on, everybody? Welcome to VA Housing Education, where we educate the military community around using the VA home loan on a national level. Today, we have an awesome addition. It's going to be Joseph Morris. Tell us a little bit about yourself.
Hey everybody, like David said, I'm Joseph Morris. My background is in investing in real estate. I've been doing this for about 3 years now. I started off on the West Coast in California and I came out to beautiful Chicago. And I'm just excited to be here giving back to the veteran space. So, yeah, let's get into it.
That's awesome. Yeah, I'm also in Chicago for the folks out there. It's been negative 30 degrees. It's been real cold, but it's about to be summer at 30 degrees next week. So can't wait for that. And 60-degree upswing is going to be awesome. So
Yeah.
today, what we're talking about is understanding your financial fitness, right? Uh, Understanding what you can do with the VA loan, how you should prepare for it. And we've been talking a lot this month about understanding your budget, understanding your credit, because it is the foundation for being a homeowner. I mean, Joseph, you have firsthand experience with this, right? You recently purchased a property. On top of that, it's a multi-unit. And it's not like you woke up, right, and said, well, today I'm buying a house, right? There was some
No,
prep work you did, right?
of course, a whole lot of prep work, working on credit, working on budgeting, saving, because budgeting is as a habit. That's something that you just don't wake up with. You have to build it day over day, and understanding your numbers to make a dream like that happen is very crucial. So,
Oh yeah, and the thing with credit is that which I've been harping on for this month, is that
yeah,
you control credit, right? It's not
yeah,
like I go to Joseph and I'm like, hey, you need to take out these credit cards and go out every single night and max out your credit cards, all the ones you have. I'm not sitting there telling you to do that, right? It's you're the
no,
one that's controlling that component of your credit. Now, how credit's controlled is going to be through a budget. So we're going to talk about today. We're going to talk about the basics of a budget, understanding your financial health, and some saving strategies that you can use uh, when we ask this. Now, for the folks that are out there, please, if you have any questions, please drop them in the comment section. We'll answer them live. And if you guys have want to set up a consultation with us on one-on-one, check out in the description. You'll be able to do that. Now, let's talk about the concept of the budget itself and what it really means for somebody, because it sounds easy, right? Oh, you need to know your budget, how much money you make, how much money you spend. Well, I can do that by looking at my statements. Like, that's not a budget, right? A
yeah,
budget is something that you track on a daily or weekly or monthly basis that's going to outline you when are your paychecks coming in, not your gross paycheck but your actual net paycheck. Because Joseph, just like when you go through the home buying process, they look at your gross income. Well, guess what? That's not your take home pay.
yeah.
And it's going to vary, it's going to vary widely, right? Some people contribute more than others. I mean, have you come across that in your experience?
Yeah, so that's a great question, David. Just I guess the easiest example is just because let's say your gross pay is $5,000 a year, that doesn't mean
Or
that's what you want to
5,000 a
base your
month?
but I
Yeah.
mean 5,000 a month. Thank you so much. Thank you. 5,000 a year would be I don't know if you'll be buying a home. But anyways, if it's $5,000 a month, you don't want to base your budget off that gross amount because after taxes, after like you said, some people contribute more. You want to see what you're actually taking home. So let's say you only take home 3,000, 3,500. That's where you want to base your home buying budget off. So I
Yeah.
think that's really important.
Yeah, that's good because the VA loan itself gives you huge flexibility, right? They don't look at DTIs necessarily. They look at residual income, which does look at net income. So let's say somebody qualifying for a conventional or an FHA loan actually has less purchasing power than a veteran, because conventional caps at 50% debt to income, FHA is 55, but I've seen 80% debt to
Yeah.
income ratios on VA loans, which is crazy, but it is possible to do. This is again why controlling that aspect is going to help you the most in that, right? So knowing, and it's tough, like just of we technically work for ourselves, right? So having a budget is extremely critical because your income fluctuates on a month to month basis, right? So for the
Mhm.
Uber drivers that are out there, same thing, right? You may get sick and you can't drive for 2 weeks. well, then what happens? So controlling or at least understanding how much you should save, right? And they typically save, you should have at least 3 to 6 months of reserves. I'm a fan of saying 12 months because you never know what life can throw at you. What's your opinion on having money saved up?
Yeah, so I'm gonna start from the very, very basic position. If you don't have a savings at all, I think your first goal needs to be $1,000 in your savings. If you're on a more intermediate level, let's say you're at that 3 to 6 months, like you have a habit of actually saving money, I say 6 months is that comfortable spot when you're looking to purchase a home. If you have Oh man. The 12 months in my opinion, that's a little excessive for the everyday person. If
Right.
if you have a bigger family and a lot more responsibilities like me myself, I am a single guy. I don't really have any kids, so I can get away with that 3 to 6 months. But like yourself, David, you have a newborn and well not a newborn, but an infant, wife, I would push closer to that 12 months.
Oh, and I got another one on the way.
It definitely the 12 months then.
Yeah, I need like 24 months at this point.
Yeah, so
But
I think it depends on where you're at in life for sure.
yeah, and that's going to vary, and some people have guaranteed income like VA disability, or you might
Yep.
get also Social Security. So all of that's going to be factored in, right? But if you can't control how much money is going out, that's how people end up actually having, when you spend more money than you make, you're the federal government. I'm just kidding. When you spend more money than you make, you start getting into debt. Okay. And
Yep.
then that debt is what happens when you accumulate that debt. It is extremely difficult to get out of because you literally are not making enough to pay for that debt. Okay.
Yep.
Uh, Credit cards, I think, are awesome because you can use points. Joseph, you use credit cards?
So I'm gonna give a backstory after you're done with credit
No,
cards.
no, no. Tell us.
So yeah, I actually learned a lesson very quite early in my investing career with credit cards. Is like you said, you don't want to be living above your means. Putting everything on credit cards is not the way to go. I dig myself into a bit of a hole with credit cards. I think they're a great tool if you know how to use them. If you're already bad at managing your money, I don't think you should start playing with credit cards. But if you have a good head on your shoulders and you know how to manage your money correctly, then you could start using the credit cards for the points on traveling, dining, eating out, whatever. Um, but
That's awesome.
yeah, definitely. If you know how to use them,
Yeah, and that's the key for everyone. I just want to also give a shout out to Kevin. Thanks for the support. We really appreciate it. Yeah. So Joseph, yeah, to your point, like, yeah, credit cards can be a dangerous thing, right? And if you say, well, again, this is why the importance of knowing where your money is spent, because then you're going to
yeah.
track that. And I'm a fan of using an Excel sheet, and I've been saying that for years now because do you use like a mechanism, Joseph, for like using Mint, or do you use an Excel sheet?
So I don't use the Excel sheet currently. I just had a friend send me one over that I think I'm gonna start dabbling in. I am really old school when it comes to my budgeting. I do everything pen and paper because I think where you're going with the Excel sheet is you want to feel the pain of where your
Right.
dollars are at. You want to feel the pain of what you're tracking. So I go through every Saturday or Sunday. I go through my entire bank accounts. What am I spending on? Am I over my limits on certain categories and things of that nature? So
Yeah. Yeah, and I'm with you on that too. Like, I look at it, I have it set in my calendar to look at my budget twice a week, on the 1st and the 15th of the month, right? Make sure that I'm tracking everything, and also making sure that your bills are paid. Just because you have auto pay set up, it doesn't mean that that bill's going to get paid. I cannot stress that enough, because again, looking at people's financials across the country, I'll be like, oh, I thought I had it set up. Or if you're deployed or something like that. Yes, the VA loan is very forgiving in that sense, but you still want to make sure that that auto payment went through, especially like a mortgage, because they charge crazy interest for that, right? And on your budget, what you're going to put is you want to make sure that you have your fixed costs, and then you have your variable expenses, which also should be bracketed, right? Fixed costs are going to be things like, oh, what my car payment is, what my mortgage payment is, what my anything installment loan, something that 100% what the payment's going to be. That's going to be your fixed costs. Variable costs could be like food, clothes, going out. Obviously, You want to take going out away as much as humanly possible because it is ridiculously expensive. Joseph, I love chicken wings. I went and got some chicken wings and a beer other week, and it was almost $35. And I'm like,
Yeah.
$35, I could have had a steak at home for that price, or I could have
Yep.
had, 4 meals for that amount of money. So I don't know. What's your take on, like, I mean, I see people going out spending money like it's going out of style. Like, you're still
Yeah.
gonna
So
need money.
that was actually what dug me into my personal credit card hole. I love food. I love to eat out. I loved to eat out. Let me
I
put it
love
that way. Until I dug myself in a hole. And when you sit there and you look at it, it's like, is it really worth it? Is it truly worth it? It's not. So now I do it much less often. And excuse me, there was something playing in the background. I do it a lot less often, but I just went out the other day, got an old fashioned for $25, and then that doesn't even include the tip. I think it's outrageous. So I think if you could stay home until you get to where you want to be financially, just take the brakes off. Every once in a while, give yourself a time to go out. I believe in a budgeting, like 50% is what your needs are towards your bills, 30% towards wants, and then 20% towards savings or debt repayment. If you could keep your spending within that 30% bracket, which goes back to budgeting, then I think you'll be okay.
Yeah, and I think, well, it's also going to depend on someone's financial picture, right? Because if
Yeah.
you're spending, well, again, if you are spending more than you're making on a monthly basis, you're
Yep.
going backwards, right? And
Yep.
it's not you got to then focus more in on, like, what do I need to cut back? Because a lot of people are going to have that FOMO, right? Fear of missing out. And I get that. I used to be there, but right now I rather stay home. And like you said, like, when you go out, it's just crazy expensive, and it's just much cheaper when you're cooking at home. Go to YouTube, go to look up cooking shows, and try something different at home. I've been making eggs the wrong way for a decade. And I recently went on there and I'm like, this is how you actually make eggs? And now they turn out great. Now I'm happy to eat at home. So Joseph, just some tips on that. You know what I'm saying?
Yeah, I
um,
meal prep every Saturday, Sunday for the whole week. The only difference is I'll make my oatmeal after the gym and some eggs. Like it keeps my budget for food pretty simple. We're not having any astronomical high numbers or anything like that for that simple reason. So I
right.
agree with you. I'm
Yeah,
glad you learned how to cook eggs correctly, David.
I know. Yeah. Get a membership at Costco or wherever you shop, and you can buy in bulk. What I've
Yep.
also recently learned, this is like off, not even on the subject of what we're talking about, but actually buying a decent fridge keeps your food lasting longer. And I never realized that till last month. We actually bought, like, not even like a crazy nice one, just it was nicer fridge. And food stays 3 times as long in the fridge. So it's, you don't actually waste food. So it's just something to think about, like, when you're going through that, especially that home journey, right?
Yeah.
It's not just, am I budgeting enough to buy a home? Am I actually budgeting enough to maintain a home? What if I,
Yes.
buy a property and I have to do some renovation? What if I need to uh what if I need to change out the electrical system? Or, like, unless you got really, good friends that know how to do it, please pass their information on to me. I need some help in Chicago. Joseph, I think you need some too.
Yeah.
But, like, those are the things you have to think about, right? Like, Joseph, when you were going through that home buying strategy, or buying your first place, did you just stop at, I just need enough down payment, closing costs, and let's see what happens?
No, no, I did not. I like to I like to make sure I at least have enough money for an emergency. So it goes back to the emergency savings fund because I did have an emergency. The first week after I closed on my property, I had had a $2,500 leak in one of my tenant ceilings. If it was
Oh,
my own
dang.
personal ceiling, I could have probably taken care of it a little bit at my leisure and whatnot, but it was my tenant. This person pays me rent. They pay to live here. They deserve to have a nice quality of living. But that's because the only reason I had that money is because I budgeted for any emergency expenses. I knew my furnaces were on the older side, so I wanted to make sure I had at least 5 to 8 thousand set for two furnaces. So
Wow.
I think it's really critical that you don't just save for the bare minimum. Oh, I need 10,000 for my down payment. I'm gonna save just 10,000. I say save as much as you possibly can, And whatever you don't spend on your down payment, consider it, like you said, for maintenance funds and things of that nature.
Yeah, and just remember too, income doesn't drive credit. So just because you make, I mean, I we have people that make 160,000 a year that are completely over their head in debt. And then you have people that make 30,000 a year, or they have 100% disability. They just live on their disability and they have perfect credit with no debt, right?
Yep.
It's all a balancing game. But you mentioned something, and I want to ask you a question for people out there that are trying to be somewhat risk averse when buying a home, or they own a home and they're worried about things going out. And like, I don't have $8,000 to replace an HVAC. What are your thoughts on home warranties?
Home warranties are, they're good when you're purchasing, I believe. I don't do them often. So I can't give too much analysis on them, but I do think they're a luxury, especially if you can get the sellers to pay for them when you're buying. So that way you're covered for a year or whatever the home warranty package is. So what are your
Right.
thoughts about them, David?
I mean, the I think the challenge is they a lot of times have a lot of clauses in them to be like, oh, we won't fix this, we won't fix that, or if you. But the thing is that just with general home ownership, they're going to
Yeah.
require that you actually maintain your property, right? If you buy a house or you're thinking about buying a house and you think that, hey, I'm just going to buy it, and you're like in the renter mindset where I don't have to
Mm.
take care of anything, I'm just going to do stuff, and if things break, then I'm just going to replace them. You're going to learn the hard way that it's extremely expensive to fix and replace things in a home. I did a video, it's actually coming out next week, about what the top 5 repairs are for a home. It's like the roof, the HVAC, plumbing, air conditioning. So a couple of those things add up to crazy money. A new
Yes,
roof,
they
right?
do.
And that's like what people don't realize, right? Roofs are about 20 grand plus to
Yep.
completely replace, and you need to do them every 25 to 35 years. So if you're not thinking in that mindset of like, do I have the money to do that, maintain it? Otherwise, you see those homes that are completely dilapidated. So you remember, when you buy a home, it's an investment, right? You are hoping that you gain equity in that property, you maintain it to sustain it, and then that maintenance of the property extends the life of everything that you have in that property, right? You're getting the
Yep.
HVAC cleaned out every year, you're draining the water pipes every year, you have someone coming in and doing that, right? Have you, like, yeah, I know you've had your place for a little bit, have you already started doing some of the basic maintenance stuff on the place?
Yep. Every winter I go ahead and get my furnaces cleaned out. I just had a tenant turnover, so I actually had to redo, cosmetically at least, redo her whole unit. I was blessed to find a property that it was rehabbed in 2015, complete gut
Oh,
rehab in
wow.
2015. So I have copper pipes and everything like that. But I like to stay ahead of my maintenance. So right now I'm getting a couple pieces on my deck, not repainted, but changed out, I should say.
Yeah,
So I could pass like Section 8 and whatnot. So I think it's very important, to, like you said, to keep up on your maintenance. You don't want to wait till your roof is starting to give you water damage problems to start changing it out, because now you cause
no,
yourself two problems. You have to do the drywall inside the house, and you have to do the roof. And most times when I see homes that have water damage from the roof, for whatever reason, the sellers will completely change the roof and not fix the drywall inside of the property. So
that's
that
crazy.
just, yeah, that's what I see frequently. And that just lowers how much, you're gonna get for your property, because the agent like me, I'm gonna go in and I'm gonna advise my buyer. They've had water damage in the past. They might not have it anymore, but they didn't care enough to fix this. So let's go ahead and see what we can get in return for this. But I'll
That's
kick it
awesome.
back to you.
Yeah, no, that's good. I want to kind of go back to some of the stuff we talked about, the credit piece. When you look at, let's say, your bank, your credit card, or your bank offers you a credit score, that's not your actual credit score that mortgage companies and finance companies look at. They typically look at what is called a FICO score, and the lenders have a specific FICO score that they look at now, because there's hundreds of models that are out there. Okay,
Mhm.
what you want to do every well, there's a couple things. Every year you can go to annualcreditreport.com and get your free credit report to review, but it's not going to give you the scores. It's going to give you the information that's on the actual credit report. Okay. Because when you look at, let's say, Credit Karma, they use Vantage Score 3, and actually it doesn't include all the information in your credit report. And we see this time in, time out. It's, you might have a 680 with a Credit Karma, but your score with FICO might be 730. But you might have a 760 with Credit Karma and your score is 630. It happens all the time. That's why you have to use like a FICO, like Experian.com offers a free FICO score. That is going to be the most realistic score to what your actual FICO score is for mortgages. Okay. The free annual credit report, it's going to confirm all the data that's on there is correct. Should you monitor your credit on a monthly basis? 100%. You should be reviewing it. And then plus it gives you alerts. Like you have a credit inquiry, boom, it's going to notify you like, hey, Joseph, you have a credit inquiry today. And it's in real time. It's crazy what they do right now on that. So
100%. That was actually going to be my question. How do you feel about Experian versus Credit Karma? Because I know I tell a lot of my clients like Credit Karma is great and all to track what new cards you might get and things of that nature, but like Experian is the app you really want to use. It's the most accurate one that I've seen. So I'm glad you touched on that.
Yeah, for sure it is. And the thing is, I mean, there's always going to be factors to it, but the FICO is going to be the accurate. And what the difference is mainly is that FICO has been around a long time, and the three credit bureaus, TransUnion, Experian, Equifax, created the Vantage Score system because they got tired of paying FICO to use the FICO scoring models. That's what really happened. And with Vantage Score, they give you better credit earlier on in the process versus a FICO score, which takes longer to build credit because they want to see a longer history of having a credit report, of having like making payments, which makes sense, right? If you meet somebody, you're meeting their representative, right? It's like same thing here. Like you get a new credit card, like, oh, I'm going to pay on time. Oh, this is going to be great. And then a couple months later, you start like, hey, I maxed out my credit card. You go over your credit card and it just completely fails. What you want to keep in mind with credit is you really want to be at a 30% or less utilization rate. So if you have a $10,000 limit credit card, it shouldn't be at 12,000, by the way. It should be at 3,000 or less. And normally for bigger purchases like that, you'd want to be basically looking at like major expenses. You shouldn't be living on or carrying balances on daily living expenses, right? If you're going out and putting it on a credit card because you can't afford to go out, that is a problem.
Yes, it is.
That will accumulate and you won't be able to pay it off. And that's how you get late. And then that's how you ruin your credit. And that's how you pay higher fees. Because one thing I've been talking about too is that credit is the number one factor for getting the best financing terms available to you. Yes, if we're all veterans, yes, we all have the eligibility of a VA home loan, but the qualification is going to change. So somebody that has the same income across the board, let's say you have two people, same income, but one spends all their money, has no savings, and has maxed out their credit cards, and the other person saves their money, has no debt, or maybe has a car payment, that person was going to be able to get much better financing terms than the person with the bad credit. So for education purposes, one might get like a 6% and the other one gets a 7.5% just because of their lifestyle and how it's affecting them being able to qualify. And why that happens too is that risk category of when you're maxed out, you can't pay your bills, your default rate or like your calculation that you're going to default increases significantly. Plus the chance of a bankruptcy also increases. Okay. I've seen a lot of people that buy homes go through a bankruptcy, and we're seeing a little bit more of these bankruptcies coming through right now. And remember, if you're a veteran and you use your VA home loan and you go to a foreclosure on your property, you do lose a portion of your benefits. Have you seen foreclosures, Joseph, kind of pop out here and there, or are they getting scooped up real fast because the market's still hot?
I haven't seen any pop up recently. It'll be like short sale and it'll get scooped up, but the full process, I haven't seen too many yet.
Yeah.
That's not really my market either. I don't work in that heavily. But I actually do have a question for you, David.
Yeah.
So say we have a first time home buyer who they have no debt whatsoever, but they do have a car payment. What do you think that car payment should be in terms of like their budgeting and whatnot?
You hear me?
Yes, I can.
Your mic cut out for some reason. But you're referring to like what a car payment should be, right?
Yeah.
The thing with the car payment is that for every about $700 a month, it's about 100,000 in purchasing power. Okay, so that's why you want to be able to control how much you're spending. Everyone's financial picture is different, right? You can maybe be good at a $200 car payment, or you might be good at a $1,500 a month car payment. It just really depends on how much money you're bringing in and what you're saving and how that's going to affect the overall picture. Because remember, VA loans look at residual income, so we look at the net income of how much you made. So all of that's going to be factored in to your financial picture. So yeah, that's a good question on that.
Thank you. Thank you. That was I think that was very helpful. That
Mike
$700.
is still out.
Oh my goodness. Can you hear me?
But I'll keep talking and then see if you can get that fixed, and then we'll rock and roll from there. So, some of the tactics you want to use for savings is going to be in a couple different ways. Either you're going to be contributing to a 401k, or you might split your bank account, right? Or your pay when it comes in, for a portion of it to go towards a savings account at a different banking institution, not something you can just click a button and it just transfers money and now we're going out. You want to be able to split those accounts out. A 401k is great from a long-term perspective, or you have a TSP account. But sometimes when you have significant debt, it might be worth it to take a portion of that money and pay off personal debt because of how much debt you're accruing, or on a monthly basis, how much interest you're paying, right? You're not getting that money back in your retirement account. So that could be one way that you could help solve this. The key, though, is not to relapse and then not make those payments or just rack up the credit card debt, right? That's something that you got to be aware of. And like Joseph mentioned, is something great is that if you have a goal, $100, 200, 300, 1,000, whatever that goal may be, work for it to save. We understand that life events happen, and we've had people that have saved money and had a death in the family all of a sudden have to spend $10,000 for a funeral to wipe out their savings. It is unfortunate that happens, but you should never give up in order to put a plan together. Those warranties we talked about help mitigate a piece of that risk, right? That's why you get insurance, so you can actually so you don't have to come up out of that money out of your own pocket. But again, automatically saving money to the side. If you're in the National Guard or Reserve, take all your drill pay and save that money, right? That should be extra money that you're receiving. You have a current job. Yes, if you're on active duty and you get the pension, or you might get disability, that's great. But it's always good to have cash on hand. When the economy does bad, prices drop, and that's where you actually leverage cash to purchase things, right? You don't wait for things to be, you don't buy at the height of everything, right? You buy low, sell high. I know it's a cliche, but the thing is that the people that can buy when it's low is the people who have money and good credit. When you don't have good money and good credit, you're just kind of out there in limbo land, or you're just kind of riding that wave on the upside. You want to be kind of at that starting point and be able to leverage cash to do that.
Can you
But
hear me
again,
now,
all
David?
that is going to be within your budget. Now, if you do fall behind on some of your budgeting, as far as like your monthly payments that are consisting of, you need to create an Excel sheet. Joseph likes to write it out. There's apps that are out there that'll help you basically categorize everything for yourself to be able to see where all that money is going, and then strategies that you can use to consolidate that. That's an important part. And then that way you're going to be able to then move forward and cleaning out all your debt to become a homeowner, or if you own a property, for some folks that are out there want to purchase again, right? Those folks want to be able to make things happen. So Again, those are all things that you want to keep in mind for this. If you don't know that if you have a service-connected disability, depending on where you are in the country, one, if you have 10% or higher, you don't pay VA funding fee, which makes the loan nearly free, but you have to be really careful because a lot of big banks that market to you on a daily basis charge the most amount in fees. It is insane. Joseph is in real estate. When he looks at those pre-approvals, it's sad to see those clients work with them because of how much they charge clients when you can get a better rate with zero fees somewhere else. So kind of keep that in the back of your mind. Guys, if you are interested in that or looking about purchasing, please schedule a call with us. We have our the Calendly link down below. Please, you can reach out to us and we can walk you through your situation. Even if you're under contract, we're happy to look at a loan estimate and tell you like, yes, this is good or it's not. For the people out there that have watched this before, and we've had hundreds of people reach out to us over the last year, we'll always give an honest opinion because this is your life that you're setting up for yourself. And it's never too early to get pre-approved as well, right? We have people right now that are 2 years out, 1 year out. That's where you want to be. If you wake up and you're like, hey, I'm buying a house today, which I tell people not to do, but ironically, I did that myself. But the caveat is I do this every day and I look at my budget all the time and I'm always like, hey, how much? Everything's good. Hey, I could execute on that, right? An opportunity came up out of nowhere, literally, and I was able to execute on it because of that. Joseph, same thing. You worked for it. You spent time analyzing your budget, saving money, and then when the opportunity came up, you didn't have to hesitate. You can execute on that opportunity. So just want to say thank you to everyone that's out there that watched us today. Please hit the like and subscribe button. Joseph, I know you got some mic issues, but Joseph says he was happy to be on the show. Can't wait to be on again. And I'll catch you guys soon.